All right. Let's flip over to the US dollar real quick here. Take a quick look at this. The dollar, again, is getting close to technical support. I called for this down move as well. We obviously know that this, again, was the pattern that I highlighted with you guys. Sharp move off of resistance. We knew this was a beautiful resistance level. Sideways chop, that's bearish consolidation. Remember your pattern formations. Down move with sideways movement is a bear flag. This, more often than not, leads to that. This angle can be like this. That's okay too. That can also fall. What isn't okay, and this is going to be a caveat of pure education, right? And this is something that took me a long time to learn. When you get this type of pattern or this, it leads to downside. However, what about this? What about that? You dropped and you retraced. Is that still a bear flag? And the answer is it is not. The tip here, and this is in my Winning Trader series, and it's only divulging a tiny bit of this amazing knowledge that I've accrued, that I'm trying to pass along to all of you guys, is that when you look at a bearish pattern, you want the 45 degrees. 45, all right, it's a horrible 45. Let me redo that. 45 degrees, all right, to 90. Anything north of 45 degrees, it is not a bearish consolidation pattern. In addition, I'm going to throw even another curveball at you. Let's get rid of these lines. In addition, so what we know is 45 degrees. This is the valid. Anything from here to here is a valid bear consolidation pattern, right? Bear, we'll just write bear for there. Now, what you understand is when you have a perfect right angle, that is the perfect setup. A right angle is your textbook bear flag. But let's be honest, charts don't always do perfect bear flags. That's why you have the 45-degree angle up to. What's important to understand is that as you move up, right? So here's a right angle. Probabilities of success with a perfect setup like this, probably about 80%, okay? Then as you go up, right? So as you go up here, right? As that line increases, slowly increases. Let's say it's from 90 degrees right angle till now, let's say 80 degrees. Probabilities go from 80% success rate to 70%. And as you uptick more and more, the probabilities start to drop. What I've factored out is that as long as you're in that 45-degree angle, the probabilities make enough sense to take a trading opportunity to the bear side, in other words, a short, as long as they're within that range. Once you get to this, right? Once you get, let's say this is a 20-degree angle, let's say 25, whatever it is, probabilities at best are 50-50 or even worse than that. And again, once you get to this scenario, that is no longer a investing trade because probabilities are equal. It becomes a gamble. It becomes a casino. You now become the gambler in the casino versus the casino. And you always want to be the casino. You want this scenario right here, right in this vicinity. That's where you're still the casino. The odds are in your favor. This no longer. You are at this point, you might as well actually go to the casino, take your buddies with you, have some drinks, gamble a little bit. At least you walk in knowing the odds are against you, that you're probably going to lose. A lot of investors don't realize that here. They still think, oh, it's an inside bar move. It went down and it went up and it's still inside. It's still bearish. Nope, that's not necessarily going to happen. All right, guys, a little education to make your Monday on point. And again, guys, that's my goal, honestly. Like, I mean, I think it's important to recognize is that, you know, I see myself doing this for another 2 years, maybe 3 years, something like that, before I kind of retire. And my goal is to create an educated group. And listen, we're seeing 30, 40, 50,000 views on these streams a day. And I pray that you guys continue to spread them because my goal, again, guys, is to help people understand how to trade markets. I don't want the big institutions bullying you guys. There's ways to do it where it's never going to be perfect, but at least you can place the odds in your favor. And that, again, my friends, is exactly what I hope the legacy that I leave is people are able to make money at least a majority of the time versus what they usually do. Let's quickly go to gold. So gold here just continues to do what gold does best, at least right now, which is consolidate. And that's exactly what you want it to do. If we zoom out on gold, we saw that bigger breakout, right? We had the bigger channel break point here to here to here to here, and these lower pivots, perfect alignment of a channel. We broke out with a monster move up. Now look at what's going on. Do you guys remember this pattern? We just talked about it on the other board. All right, so what's this pattern? It's the opposite of what we were talking about before. It's a bullish pattern of consolidation, right? So like that, that's exactly what that pattern is. Probabilities. Does it guarantee it? Could gold go like this? Yeah, it could. It's just that probabilities tell us it's going to go like that. So essentially, whether it pulls back a little bit more, eventually, as long as this general pattern, remember, pattern-wise, what type of pattern? Somewhere in this vicinity, 45-degree angle. So it could come down like this. That's okay. But the point is, as long as it stays in that zone, you're going to look for a move to the upside. And again, that's all it is, folks. There's no brain surgery here. There's no crazy calculations. I don't use calculus. I don't use all these crazy indicators. I literally let the chart talk to me. That's all I do. Chart, what are you saying? Oh, look, channel. Oh, look, breakout. Oh, look, bullish consolidation. What are the probabilities here, right? Downward sloping channels generally break to the upside, right? So when you have this, eventually you break like that. When you have upsloping channels, right? Eventually you break to the downside. I mean, it's just literally looking at the pattern formation and letting it talk to me. And I think that's so, honestly, it's very freeing to not have all these indicators all over your chart. I mean, I've seen some people's charts that I can't even decipher. I'm just like, what the heck is this, man?